Hello everyone, welcome back to a new video. In today's video we're going to discuss about a volume profile. In fact, we're going to start from the very basics of volume profile and then move on to the advanced level. So it might take 2 or 3 videos to get to the entire series. So for people who are new to volume profile and who do not know how to set it up, or rather how to exploit it on any time frame, let it be intraday time frame and even for swing and positional trading. So we'll go one by one. In today's video we'll just go into uh, what is volume profile, how you can set it up, and how you can exploit it, the major things and nuances about volume profile that you can use immediately after this session, and go back and check your charts, how you can use them and how you can deploy it. So if you see over here on the right side, I have the bank nifty futures. Okay, so once more I keep repeating this, the volume profile that I have set up is on the futures chart and not on the that is the spot chart. Why? Because the volumes are traded on the futures chart and not on the spot chart. Okay, so that is one. Secondly, what I have on the left side is the options. If you see over here, this is the 49,000 if I'm not wrong, CE, 48,900 CE, and I also have 49,000 PE. So you can shift around and look at what you want to trade. If you're buying or selling, again it depends. And how to set up these charts, I have discussed this in detail in a video just a week or two back, so you can go there and check it as to how to set up these charts. Okay, so the first thing that we start is what is volume profile. So if you see on the left side, you see something like this coming on the charts. Okay, so the basic that every broker or any basic charting platform provides you is the volume bars, or on this x-axis, that is the horizontal axis, what you have is the volume. Now volume profile, it is also known as a volume at price. Okay, so what it means is that you have the volume at each individual price as well. So over here you don't know what is the volume transacted at individual prices. On in this manner, if you set up a volume profile, you will have volume at each individual price and you will know at which price how much volume transacted. Now that is one part. The interesting part comes is how to exploit this information and use it for your daily trading, intraday trading, even scalping. It is a wonderful tool. So we'll go one by one. Okay, so now what we've discussed is what is volume profile, and or volume at price, as a lot of people also call it. Now comes the next part. What are the various aspects or nuances of volume profile? So you would have heard a lot of times people call it the high volume node. Okay, so if you see this, wherever you see this protrusion, or exactly like this on a horizontal axis, the bars which have the length is higher, that means the volume transacted over there is higher. Similarly, in a vertical axis, when you plot it horizontally, so if you see this magenta color, it means the highest volume is transacted here, and blue is signifying the next highest volume. Okay, so what do we mean by that? That if you look at this, of course this was deep in the money in the beginning. That is why the volumes here were not as much. So don't confuse with options. You need to be very careful when you're looking at a chart. Of course a lot of volumes have started transacted here. This is because this has now become just at the money or just in the money, maybe we will see about that. So that is why a lot of volume has started stepping in. So it is very, very common that the volume start picking up as soon as the options starts getting in, I mean at the money or just in the money, and that is why we have something like this. So why do I put on this chart? So that I get an idea along with the futures chart what is happening. Now if you look at the futures chart, what I'll do is I'll expand it so that you can see it a little better. Okay, and then we will get the options chart. Okay, now if you look at this chart, so when you look at this particular profile, you see the high volume nodes that we just discussed. This is one, this is one, this is one, and this is one. Okay, so there are we have set it up, and the tick size I will just share it with you. I've shared it again in my previous video, so I can see these nodes stepping up. Now how I play these nodes is, I will just explain it to you after I explain what is the next thing that is important, that is called the low volume node. Okay, so as discussed, as the name says, the high volume node are these places where the volumes are protruding, and they are places where the volume transacted is higher than generally the other places. And a low volume node is places like these. Okay, so I will just mark them. If you see very closely these places where absolutely low, very low volumes were transacted. Now the interesting part about these low volume nodes is if you look at a price action chart or a low volume node charts, so these are generally rejection zones, or if people who use price action, you wouldn't have been able to know this, but when this goes down, if it would have come up and you wanted to go a short, this is a very, very good place to go short. Okay, the problem is it didn't give a pullback and it kept going down. So these low volume nodes act as rejection zones. So what do we mean by that? Whenever the market comes, for example, in this place, it takes a rejection, goes back, comes down, and look at where it takes a rejection from. So this is a low volume node. So generally, if you want to take pullback entries, these are really good places to take pullback entries, and just above the high volume node you can have a stop loss. So this can be done at any time frame. This is an intraday time frame, as you can see. So what we have discussed is what is a high volume node, what is a low volume node, and how what is their significance. Okay, so now let us come into more detail. Why do you think this has happened, the low volume node? It is because one part, again, I have discussed this in footprint charts. We'll go into detail after we finish the volume profile series and go into how we can look at these nuances even in the footprint chart. Okay, so these low volume nodes are, of course, where absolutely very little volume has transacted. Why? Because someone here has shown some sort of aggression. What do I mean by aggression? The market orders were very aggressive here, and they did not let the price come back or breach this zone, and they entered again. So this is a place where very little volume was transacted because there was a lot of aggression being shown over here. So obviously, if you look carefully, what would have happened when the chart was forming here and when this was not here? So it took a rejection. Obviously, it was the low of the day at that point, and it held for a lot of time. And when it broke with aggression. If we would have started forming a node over here, a high volume node over here, that is the point where you do not try and take a short or a continuation trade, because if you look at over here, what has happened over here? Okay, the difference between this low volume node and over here, this is again a low of the day, but look at the volume that has started transacting here. This is not something like this. A lot of volume has stepped in. So this, at the moment, you can consider low of the day. Could be this is the low of the day and the market doesn't break below this, because what? Because the value has started or volume has started coming in here and it is trying to hold. It in any sense does not mean that the market cannot go below this, but when the market comes over here and holds or comes here, I would not like to be aggressive and go short in contrast to something like this. Okay, all these places, if you see, you could have entered short. Okay, now let's consider the latest low volume node that we had. If you look at this place, the market did try to come up to this place, failed, and it is now trying to go down. So this is again a good trade. Whenever it comes to this place and it fails, this is a good place, or a low volume node is a good place. I will just get a rectangle tool so that I can draw it even better. So if you see, this was the zone. Okay, the market took resistance from here and went down. The other thing that you can deploy along with the volume profile, when you're looking at this, just look at the candle, the next candle that happened after this breakout. Okay, there was some sort of pullback that came in, so the buyers obviously were trying to step in. The next thing that we always look at this volume. Okay, so this is the bar which had a huge volume. It went down and it closed almost about 30% up, okay, from the low. So that means there are some sort of buyers that did try to step in over here, and the bar failed. Okay, so I generally keep this next bar where this there was a sort of buying that came in and it failed. So obviously at this point, when the buying was, or the market did, and if you look at the volume profile over here, at that point there was a little volume also starting to come up over here. The market tried to move up and it failed. So this is a zone, that is why I marked it. I can expect when the market comes here to hold. Okay, so if I have entered a long, let's say this is again I call it a hero trade, that you're trying to find the bottom over here, but a lot of times if it has failed and it is crossed, a long was due. Okay, you could have taken a long, and when it comes here, that is my target. I do not want to go above it. So what I'm trying to say is location becomes really important. So now if you are coming here and you know a low volume node is here, you wouldn't want to enter a long here. What do you want to see? You want to see firstly the bar close above it, and then a pullback here to this low volume node, and then maybe you attack a long, and the target again becomes the next low volume node over here, okay, and so on and so on. So now if you look at it, if you look at the present scenario, just with the low volume node information that we have just discussed and the high volume node information, I know now for a fact that a lot of volume is being transacted here. So this is a zone, and where I know that some sort of buyers are present. Okay, I will again draw it with the help of a rectangle. So you can just keep plotting the story and take your trades accordingly. So I know for a fact that even without looking at footprints, I know for a fact that there is a presence of buyers over here. Okay, it doesn't mean that I would try and go long immediately. In fact, this is a place, if I see a confirmation and I go into footprint, I can go and attempt a long, because it is starting to reject from this place. If you see, I mean 2.5 minutes of the 5 minutes are over, and I can see a rejection happening in this place. So I maybe would have entered a short or a long, sorry, from this point, and hoping for at least this bar top. Okay, why? Because again, I just told you the lot of information is in the next bar from where the rejection or an aggression takes place. So obviously this was rejected, and the next bar gives me a lot of information that the next type of selling I can face is over here. So the bar is going up. Okay, again, it depends on the points you have. Now the next thing that you want to do is, when you look for a long trade, let's say over here, okay, what do you want to, before you take a trade, you should know what your stop loss is. So obviously you want to place your stop loss here. So let's say you would have entered at, let's say 75 or 76 or whatever, and let's look at the stop loss over here. So this is a 50-point stop loss, and what were you expecting? Let's go over here, 145, so about 70 points. So maybe this would have been a good trade because it was more than 1:1, and then you enter a trade. So now what we have discussed is, I will recap and summarize. What we have discussed is, what is a low volume node, what is a high volume node, and how do you look at it when you're looking at it in live markets. Okay, so this is the scenario that is playing out. Okay, and of course you can expect a lot of chop after something like this happens. You can expect this to continue before it breaks out or breaks down for the moment. Now comes the next part. When you're looking at these volume profiles, the next interesting part, or what you should look at, these volumes, okay, below as well. Now if you look after this point, after this particular point where a lot of volume came in, the next high volume was here, and again you see a presence of buy. So why have I drawn this zone? Not only because of the volume profile over here, but the volume bars below. So this was the next bar where a lot of volume closed, and it was similar to this. So I know that the buyers are stepping in, and you look at the drop in volume. Look at this drop in volume. Of course, it is going up and the volume is dropping. So that is another sign where you have to be little careful that the, I mean, the up, wherever the bar has started to go up, okay, the volumes are not that high. Okay, so you have to keep that also in mind. So as of now, I do not see this, I mean, break immediately. What I would rather see is a chop around for some time, when before, I mean, after a pickup in volume of some sort, 1 bar, 2 bars, only then will I see or expect this zone to break out. Okay, I will just clear this. So you see the drop in volume that is taking place. Now this was an up bar, and the volume did pick up over here, and the next bar, I mean, it just stopped. So this is what I will keep expecting. Although if you would have entered a trade that we just discussed over here, somewhere close to 75, it would have been fine, because our target is just this place, that is 145, and not above that. So it is okay. If your targets are that small, it is okay. But if you're someone, for example, who is looking for targeting the next high volume node here, so always keep this in mind, that it would be better if you see a good pickup in volume. So when we are in these chop zones, these low volumes over here, it will keep happening like this, and I mean, it is smart to fade the trade. So what we have done here is, we have faded the trade. What is that? When we came down, we didn't expect a breakdown over here. We rather expected the market to move up and test the 145 zone, which we hope it does, and our stop losses are in place. So you see, we have already, I think, got 1:175, and let's say 40 points we've already won. Approximately close to 1:1 is, yeah, we've now got 1:1. So we got our 50 points if you would have entered at 75, and now we're expecting the break or touch of 145. So you can trail your, I mean, position if you're here. And this is, and why I'm telling you all this is, when you draw these zones, do not expect a bumper trade. Do not expect 1:5 over here. It's not going to happen. It is going to happen only if there is a pickup in volume. So after, let's say, if you've come here, the smart thing is to immediately trail your stop loss. We're going to approach that target area that we just discussed. In fact, if you reach 1:1, you should start trailing your stop loss. It's because we are in this chop zone. If, for example, you were trading against a low volume node, for example, if you're trading, if you're here and you wanted to take a short because of this low volume node, then you can maybe expect 1:2 and expect a break of this this low, previous day low, and so on. Okay, so I think we've got here our 1:1.5 or something like that. Okay, and this is the play. So what we have just discussed is a low volume node, a high volume node, and the way we can draw these zones and expect or trade the volume profile. So you can see there is nothing, I mean, simplicity is the best thing to do or apply when you're trading. If you have too many things on your chart and too many concepts or too many, I mean, strategies coming out of such a simple concept, you will always get confused. So we've just deployed a simple strategy based on a low volume node, a high volume node, and these zones that we just deployed because of this place. Now you can keep drawing these zones everywhere. Now the difference between the zones that we had on top, that is I think we deciphered 4 zones. That was 1, 2, 3, and this is the 4th zone. The difference between all these zones is that now we have a high volume node below us. Okay, so the next thing, a lot of volume profile, I mean, people who use is that of course it is important as well. Now value. Okay, so what do you mean by value? By value I mean is wherever the chunk of this volume has transacted, we call it value. Now on some days, something like this, if you look, it is a balanced profile. We will again discuss this in the next session. We'll go into the profile shapes and so on. So this is just a basic and a primer. So when you look at a profile like this that happened yesterday, it is a balanced profile. Okay, so you see something like this and very little volume transacted over here. Now on a balanced profile, what you generally expect is the market to again fade. So you do not enter aggression or an aggressive trade on the top expecting a breakout here or a breakdown here. So this is a balanced profile. You have a simple I mean, protrusion here, a lot of volume transacted here, and this value area is 68% of the entire volume. So we draw a value area, although I have not drawn because I just want to look at the volume and I can have a I mean, an idea of where the value is. So without even the value area showing, you can do and change that in the settings. Again, you can go back into the previous video and see how to set it up. So what you'll see is, you will see a value being shaded something like this, and if I'm not wrong, the value would be somewhere here. So what that means is 70% of the value or the volume of the entire day has transacted in this place. So what does it mean? It means that for this day, whoever the players are, or whoever the institution or whoever it is, they are considering that the fair price is somewhere here. Okay, and it is within this region. So value, or the next thing I'm going to discuss is POC. So this is called the point of control. Wherever the maximum volume that is transacted, which you can see by magenta in color, it's called POC or point of control. And what you have on Quantower is another blue thing, which is called the secondary POC. That is the place where the volume transacted the second or the highest, second from the highest. That is, the highest is magenta and the second highest is blue in color. So these two places are over, and you see that when you have something like this, then is the place when you actually start saying that the value has shifted down. Okay, so what does it mean the value has shifted down? That if, for example, in fact it is not shifted down, it is overlapping. So it still doesn't mean that we are totally short until this day happened, of course. Okay, so by value shifting down is, for example, if the value was here and then you also saw some value develop here, it has come down and shifted back to the place where it was, where it started from, where this up move started from. So this indicates that the value shifting down indicates that there is a change in trend or a continuation in trend. By that I mean, if the value shifts down, that means we can expect I mean, the market to keep continuing trading lower. Okay, that is what I mean. So when the value shifts up, so how is it important? For example, if the value is down and the market goes up, we generally say that the market would come and if for example there was not so much of volume that was transacted, it was less or something like this. So what we can expect, although the same thing has happened here, is what we can expect is when you see a low volume transacted over there, this volume should either fill, that is the value starts shifting up, or when you see a low volume, what you can expect the next day is a test. If for example the market had paused here and not come down here and stayed here, and the volume would have been less, what we can expect the next day is the market to come down to the value area high of the previous day over here and then resume its up move, which is very, very common. Okay, but what happened here is a lot of volume was transacted here, if you look. So you cannot say that only this is the value area. That is the catch. Okay, there is a lot of volume that is transacted here and the market moved down. So this is the area, this low volume node becomes really significant. Why does it become significant? It is a make or break zone. So whenever the market tries and breaks this low volume node, you can go and attempt a long. So if you see, this is the low volume node which we have not been able to break for a lot of time. Okay, so this is 2 days. It has attempted, it didn't attempt this day, and it had tried to attempt today and it failed exactly just below. If you see the volume area, low volume node is something, this is the area. So it failed before that, and if you look over here, a lot of volume was transacted over here. Okay, so what do you make of this? Such high volumes over here, what do you think has happened here? In fact, this is still the POC. The POC has not shifted down. What do you think has happened over here? A lot of people were trying to buy, and someone, it was a gap up opening, and someone on the other side was passively taking all the orders. And the guys who have traded here, in fact the smart people or the institutions that have traded here, were actually selling their positions. How do I know that? Because of what has happened over here. So how do I use this? Okay, now this is a continuation volume POC that again in the settings you'll see it will be extended till future intersection. So whenever this comes up to this point, I will take a short, or I know that whenever it comes up over here, I can expect a sort of a pullback to the next low volume node. Okay, this is the place. So this is the low volume node. I can expect a sort of pullback. So this is about 150 points, and this is how I would play a high volume node. Now the important part is to understand where this high volume node is. Okay, what do I mean by that? This high volume node caused something like this. Okay, this high volume node caused nothing, so I do not carry this high volume node. You see the next day it offered nothing. Okay, so be intelligent and smart about the volume nodes that you carry, or the POCs that you carry forward. This is a good POC to carry forward because I can expect a rejection whenever the market moves up, and my target whenever I enter a short would be the next low volume node. Okay, so you can see we have touched that 145, and this is the place exactly. I will just get that rectangle or a ray tool. So what we discussed is I can expect some sort of rejection at this zone, which is again happening over here. So this is one, if you see 145, 155, in fact we've broken that. So we when we were discussing, we were somewhere here and we said it would have been a good trade if we would have gone long. Now do I expect this to break out? No, as I've been saying all along, I would do it only when I see a pickup in volume. Do you see a pickup in volume down? No. So what I can expect is when I approach this zone, I am not planning to take a long here. So understand where you are, understand the location, and understand why you should not be taking a long at this point. Okay, this was a very good long when we were discussing at that point in time. At this moment, this is not a good long because I know in this zone it can keep chopping around. And why do I know that? Look at this volume. It's absolutely abysmal for anything to happen. Okay, now this was the first part of the volume profile. Hopefully I was able to impart or share something new with you. The other thing is you can also deploy this on an options chart. You can similarly see something similar. This is a call option, similar happening over here. But again, because the volume, you cannot differentiate between the volumes over here, because at this point, as I just discussed, this was in the money and this is now at the money, or this was deep in the money, or this is just at the money, or just in the money. So that is why you see a pickup in volumes down and you see the volume profile a little fatter over here. The same rules apply although over here. That is wherever you've seen a good up move from. So I will show you what it means. So this is how you can employ. This is the last thing we're going to discuss, and then we will discuss the remaining part in the upcoming sessions. So we'll close the session after this. So if you see, look at this high volume node and look at what it caused. Okay, this was the effect. Now again, the same principle, I can expect some sort of rejection whenever the market approaches there. Did it happen? Of course it did. We don't know for how long, but I got a rejection. I got 20-30 points if I'm looking in an options chart. So I've got those 20-30 points from this point. And if you look at, or you draw the simple, because this is a secondary POC, I did not get an extension, but you can just mark this. It was 418. Let's go further. Okay, this was the POC that was carried forward, and it caused an up move. So when the market approached this place, did we get a good rejection? Yes, we did, although it failed. So the same thing can happen here, but we got a good rejection. By good rejection, I mean, let's say it was 543 or 543. If you entered here, all you want is 25-30 points, and if you see, it gave you a good 50-point up move before it failed. And when you're looking at this, what is your target? As we just discussed, the low volume node, the next low volume node, which was somewhere, let me get it here. If you entered somewhere here, the next low volume node was somewhere here. Okay, if you look, it was between this. So if you can draw a rectangle, it was somewhere here. Okay, so 593 would have been your target if you entered, let's say, at 557 also, and the stop loss would have been at the time looking at the volume profile, let's say 25 points, and you expect at least a 40-point move on the upside. So you can play this on the options chart as well, like I just discussed, but you have to play it not like what you do on a bank nifty chart, because again, these are quite volatile, and how you can play it is from the previous days POCs or good volumes transacted. Similarly, this place, if we get a move down, let's say, or move up, whatever it is, so I will carry forward this POC for the next day, for Monday or Tuesday, whenever the market approaches here. So that is how you can play. And why do I carry these zones? Because these are options and futures, both places. I know, I mean, someone has been betting their money that this place is either going to go hold or go down. Again, it remains to be seen, but that is how you can play these zones. So we'll end the session over here, and we'll meet in the next session for the next part of the series. Until next time, thank you. Bye bye.